Brian, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with cut questions. After a much hotter than expected inflation report muddies the outlook for the Fed and maybe for investors alike. The scorecard with 60 to go in regulation looks like this. We've been lower ever since the PPI print showed the largest monthly jump in wholesale costs in some 3 years. We're off the worst levels of the day, as Brian was just saying. The broadening trade stopped in its tracks for the most part. The Russell 2000 falling the most today, as that has been the biggest beneficiary of rate cut expectations. Home builders, too, they're falling. Many mega caps are higher today, money flowing back into that area of the market, and we'll follow that into the close. It does take us to our talk of the tape, this record-setting run for stocks and how dependent it now is on the Fed cutting interest rates this fall. Let's ask Tom Strat's head of research, also the BitMine chairman. He's here with us at Post 9. It's good to see you.
Great to see you, Scott.
So how about that question? I mean, it's on a couple of fronts. Like, we came in to this week, which you said was going to be the start of a pretty good rally, which it kind of looked like it was. Now what?
I think that the arguments and elements for a rally to continue are in place, because even today, with the hot PPI print, the stock market is basically flat. So we had a down open. I think investors bought that dip. Part of it is I don't think that the PPI is sending a message that inflation's soaring. There are some things to sort of cut out of that number.
Sure, I agree, and people have said that throughout much of the day, but it seems to have changed the conversation, if nothing else, about the amount of rate cut we might get in September. Is that fair?
Yes, it's very fair. That is correct. But if, as we think about the rest of this year and next year, I think that the thing that's the worst case for investors is Fed hiking. If the Fed does nothing between now and year end, I think some would actually argue that's half full because the economy can handle these higher rates. But if the Fed does 25 or 50 between now and year end, really to normalize real interest rates, that's actually positive for stocks. So I think unless this was going to bring in the odds of a hike, I think that's why markets had a muted reaction.
Well, what if they don't do anything? I mean, Steve Leisman, who's going to join us in a minute, made the argument earlier today that this changes the conversation from, 25 or 50 to 25 or nothing. What happens if we go on the side of nothing? Can this market stand up under that?
Yes. I mean, because number one, and I'm sure Steve's going to talk about this, the economy doesn't seem to be suffering under the weight of these current interest rates, even though the Fed is much higher than the rest of the world on policy rates. And the second part of that is, of course, that if the Fed does 25, it's still a dovish move.
Well, it could be a hawkish cut. And Leisman's thrown out that too, right? If they cut 25 and leave us with the feeling like, all right, you got your little lollipop here, everybody, and now we're going to wait and see.
Yeah. I think the market reaction, of course, is really how people are positioned. And we, at Fundstrat, we're finding a lot of investors are positioned as if we're going to see a pickup in inflation. So to them, they were expecting a really hot PPI number, thought this was going to start a decline in stocks. And that's why I think markets didn't fall as much, because I think many people have been positioned for a sort of a hot set of PPI numbers.
So Steve Leisman, I'll just bring him in now. I mean, I can only mention him so many times without actually bringing him into the conversation. He's our senior economics correspondent. I like how you framed everything up today of how the narrative has changed. We continue to hear from Fed speakers, too, including one that you spoke with earlier on our air, Musalem. Barkin also speaking within the last hour. What are we learning about what this print today really means that investors need to hang on the most, you think?
Well, Scott, there's just a split out there. The market is kind of hell-bent on the freight train of a September rate cut, and the Fed is simply not, certainly not a majority of speakers so far. Musalem was right down the middle. The PPI rising 0.9 for the fastest gain since the pandemic. Take out food and energy and trade, and it's still pretty strong 0.6. JP Morgan writing the fact that there is upward pressure across all recent inflation reports. Basically, it's going to give Fed officials some pause, is what they say. And then Musalem sounding like one of those guys who's saying, look, I'm in the pause camp here. So it's a big deal. Scott, I want to just show you real quickly the 2-year note. Take a look at the 2-year, and you can see the push me, pull you, the tug of war going on with what's happening in the market. You see the 2-year It declined after that inflation CPI report. Now it's back up here. Now take a look at probabilities. You can see what's happened. First of all, the 50 cut is out. And that 93 there is 93, not because there's 7 percentage points as there was yesterday to 50. There's 7 or so in the Fed pausing. October's almost gone, you know? And so really we have one rate cut only fully priced in for this year. That's sort of the hawkish cut trade right now, that maybe not in October and better probably not in December. That's where we're at right now when it comes to, Scott, the Fed funds trade and how they're all reacting to this. I think zero or no cut is a possibility for September, but it's all going to hinge on that September data of inflation and jobs.
Yeah. Hang with us as we go back to Tom. You made the argument that this market was not just going to start this next leg of the rally this week, but it could potentially be a sizable one.
Yes.
That I think you told me we could go 6,600, if not higher, this month.
Yeah.
And this doesn't change that at all?
No, it doesn't. You know, last week we said the breakaway move would be S&P 65, 6,600. So I think that's still intact. I don't think that one data point is enough to change a thesis around the trajectory of inflation. And our base case remains that this is going to be ultimately viewed as transitory by the markets.
But we have this tension that exists. Labor market looks like it's weakening, and now the inflation market looks like it's at best just kind of staying where it is, if not getting a little bit more sticky. I mean, that is a real tension that the Fed has to deal with and may ultimately have to make a decision on one side or the other. We think we know which way they'd lean, but we're not entirely clear. I'm not sure the market is either.
Yeah. Well, I guess this is the challenge for the Fed, because they're having to make a decision where there's no equilibrium, right? Because the market's tension around whether there's weakness and deviation from the job side versus inflation, it is really the Fed trying to manage expectations and keeping inflation expectations anchored. So a lot of data between now and the next meeting may not be inflation related, but it's really how the market is perceiving these inflation prints. And if we shift towards viewing it as transitory, it makes it easier for the Fed to move forward.
Steve, you have Goolsbee tomorrow morning, don't you? I can almost assume that we know what he's going to say because he's been non-committal in everything leading up to this interview tomorrow, right?
Yeah, he's one of the ones who has already said that he's not convinced it's a one-time price increase. But I do want to echo something Tom said, because Jeff Schmidt, who's a voter this year from the Kansas City Fed, he'll be our host next week in Jackson Hole. He said specifically that he looks around, he goes, hey, I don't see that we're so tight. He looks at the stock market, looks at the bond market. Which parts of the economy would you look at and say, okay, we could be doing a lot better here? Tom also said something that I want to make more confusing and more technical than Tom said it, which is that there's stuff happening on the equilibrium on both sides of the Fed's mandate. You tell me what the right equilibrium rate is for the employment market, given what's happening with immigration and deportation. Then tell me what the right equilibrium is for inflation, given what's happening with tariffs. Both of these things are in constant flux every day, with a tweet from the president, other things going on, trying to figure it out. That's a reason I think some Fed officials would say, hey, I'm waiting to figure out what's going on here before I do anything.
I mean, with all due respect to President Schmid, I still want you to get a good room assignment in Jackson Hole, Steve. I mean, the housing market is horrible. If he wants to look at one really important place that maybe carries a lot more weight than other areas, it's terrible. And cutting rates, many believe, would help at least give a little bit of medicine to that.
Yeah, I'm not sure, Scott, that cutting interest rates wouldn't mean that the money you save on the interest rate wouldn't go right into the asking price for the home. So that's not clear to me that it's an interest rate problem as much as it's a supply problem. So I agree that lower interest rates would help some people into their home, especially the hardest hit out there, the first-time home buyers that have to struggle and stretch to get into a home. I agree with that. But right now, when you have a limited supply, what would happen was a rate cut would end up increasing the price of the home, not necessarily in a saving for the buyer. And by the way, if that's the problem, and I'm going to talk heresy here, nothing stops the Treasury, the administration, or the Congress from providing further assistance to the mortgage market if that's what they want to do. Treasury can go out and buy mortgages and drive down the rate if they think that's a problem. The Fed's trying to make a single interest rate for the entire economy. And right now, the way they see it, they're a little bit above neutral, a little bit restrictive, not 150 the way Scott Bessent says. And we just had David Zervos on, one of the potential candidates for Fed chair, who said the Fed should cut 50 and they're leaving millions of jobs on the table. That's Zervos' point of view.
Yeah, Steve, thank you very much.
Pleasure.
Steve Leisman, look for you in the morning with Goolsby, our senior economics correspondent. Alicia Levine joins us now, too, BNY Wealth, head of investment strategy and equities. Good to see you.
Great to see you.
If nothing else, since we're talking about housing, the housing trade, which had been going gangbusters for a handful of days, seems to be now in question as a direct result of the conversation that we've just had with Tom and Steve.
Well, it's completely levered to what's happening with the probability on rates. I'll say this, that I, like my friend Tom Lee here, think that there's asymmetric risk to the upside in risk assets because everybody is waiting for the sky to fall. Whether it's a looming recession or whether it's sky-high inflation, we're waiting for the stagflationary moment. And people are positioned as such, and they're underfunded. And in the end, when the data come in, such as CPI earlier this week, on target, on the screws, essentially allows for a rally. Today was a surprise to the upside on inflation, but it's a point, it's not a trend. And I'd say that there is going to be more data, but ultimately, I believe that if there is a choice between choosing the inflation side of the mandate or the employment side of the mandate in a world where the equilibrium is now between, let's call it 40 to 70,000 jobs as an equilibrium rate to keep this low 4% or more or less unemployment rate, the Fed's going to be very aware of that.
Well, that's why I said earlier I wasn't trying to be cagey about it. I think we know which side that they would lean on.
They're going to lean on the unemployment side. And if the Fed starts to cut in September at 25, it is rarely a one-time cut. It's never the lollipop.
Let me ask you this.
You get a couple of lollipops.
You use the word underfunded, and I want to make sure I understand what you mean. We're at record highs, right? Are you saying that there's still too much cash on the sideline from non-believers?
Yes. Yes, and let's just say it, there has been a political undercurrent to all of this on the policies, and the fear of the policies and sort of the investor sentiment being at rock bottom in March and April has not fully wound out of the market yet. And you have a lot of hedged portfolios, and you have a lot of investors, what are we at, $7.5 trillion in cash on the sidelines, simply waiting for something to change. In the meantime, the S&P's rallied 28%, NASDAQ's rallied 40%. The U.S. has trounced the rest of the world. Remember, fleeing the U.S. and U.S. exceptionalism is dead. By the way, the U.S. outperformed the rest of the world by 10% since April 8th. So, all that has really come in the face of people not believing in it. The investor sentiment is not overheated, and that's why we still think there's asymmetric risk to the upside, understanding the Fed has the worst of dilemmas here.
I think you agree with almost everything that Alicia said, right?
Yeah.
That's not that interesting.
That's right. I just would say ditto. But I think one of the points, Steve, I would have made as a counter to Steve on mortgage rates is that there's still an excess spread of the 10-year versus the 30-year mortgage. And I think if the Fed resumes cutting, that spread, which is historically 165 basis points, it's currently over 300. So we could see a disproportionate decline in housing costs. That's a lot of relief to a lot of Americans, especially when Powell talks about the pain of inflation.
Almost every single call, every single time about any single start to the broadening trade has been wrong. It's lasted, and then it's petered out because there just wasn't enough stimulus behind it to keep it going. Have we had another one of those moments? Are we in the penalty box again? Because what was maybe 50 is now 25 or none, and these kinds of stocks just cannot work? in that environment?
I think small cap has a challenge because of the earnings picture for small cap. Like the best companies have been picked off by private equity, and you're really left with a difficult basket of stocks. Having said that, mid cap is very interesting here because it's filled with industrials and financials. The deregulatory agenda and the one big beautiful bill is actually very beneficial for these companies, and they're going to see an earnings boost, a margin boost from this. So I'm going to separate my mid cap from my small cap here and say we do think there's an opportunity in mid cap. You know, I think the small cap trade when it comes is literally that. It's a tactical trade as you push through the excitement. And if there's a Fed cut, like, you know, we don't try to time the market, but I think it's got a time horizon on it.
I hear you, but I mean, this has largely been a large cap rally from the bottom in April. Whether you're talking about mega caps or industrials or financials, that's what's gotten you here. Any reason to move off that?
Well, I mean, if we look at August 1 as like a benchmark, because we're halfway through the month, even with today's decline in small caps, they're up almost 4%, which is 350 basis points above the S&P. And Ethereum, which is correlated to small caps, is up 26%. So I don't think we've unwound any of the progress small caps have made following a series of data over the past 2 weeks. So I think today's PPI number is not really being seen as, when a market's perspective, as really changing anything.
That's how you see it?
That's how I see it as well. I still think there's a trade there to move into other asset classes. It's a bad day. I mean, just to go back to the Steve Leisman point on the housing market, you know, if there is a cut, on the margin, you'll have existing homeowners start being able to move out as mortgages come down.
Oh, of course. He's not naive to that.
But you get the supply issue there because it's been frozen. People have been frozen in their houses.
Yeah. That's been as much the freeze of people trying to buy a house. It's like if you have one and you're sub-3 mortgage, which so many people are, it's like, why in the world would you sell? And then where the heck are you going to go? Yeah. So it cuts always. Guys, thanks very much. Alicia, thanks. Tom Lee, always good to catch up with both of you. Just about 15 from the bell. Back to Christina now for the stock she's watching. What's on your list?
Coherent shares, they're plunging right now after the optical networking company posted a weak outlook for the quarter, or the current quarter, I should say. It expects a shortfall following the sale of a defense laser business for $400 million, and that's why you're seeing shares down 20%, erasing all of the stock's year-to-date gains. Amcor also in the red after the packaging company's earnings and revenue for the quarter fell short of expectations. The company also said it conducted a review of its portfolio and is considering divesting units outside of its core portfolio, such as its North American beverage business. Shares are down more than almost 11% right now, their worst day since 2020. And then lastly, we have shares of TeraWulf soaring after Google took a stake in the Bitcoin miner as part of an AI hosting deal. So it's a little complicated. The 10-year agreement with a AI cloud platform FluidStack includes Google guaranteeing $1.8 billion of FluidStack's lease payments. So if the company defaults, while TeraWulf, I should say, will also deploy over 200 megawatts of power. AK, what you just need to know is that Google's going to be taking financial risk in exchange for getting a stake in TeraWulf through warrants. And that's why you're seeing TeraWulf up 56%. They got the backing from Google.
All right. Christina, thank you. Christina Partsinevelos. We are watching another name, Eli Lilly, today. Angelica Peebles is here with more on that. Angelica?
Hey, Scott. Well, Lilly today is saying that it will more than double the list price of its weight loss drug in the UK. So starting in September, the highest dose of Mounjaro will cost 330 pounds. That's up from 122 today. And the change will only affect people paying for the drug out of pocket. It won't apply to the UK's National Health Service. And Lilly, in a statement, says that it shares the Trump administration's goal of aligning drug prices in developed countries, especially Europe, and that the rebalancing may be difficult, but it means the prices for medicines in other countries need to increase in order for them to lower in the U.S. Now, Lilly did not announce any changes to prices in the U.S., where the list price for its obesity drug is about $1,000 or $500 if consumers buy directly from Lilly. So more to watch on that front, Scott.
Angelica, thank you. Angelica, people still ahead.
Hey, this is George with Blue Cloud Trading. It's Thursday, August 14th. It's currently 4:13 p.m. So the market is closed, and we are going to take a look at the markets. We're going to look at the index ETFs as well. Let me show you exactly what we'll be taking a look at. We're going to look at the SPY, the QQQ, the Russell 2000. We're going to talk about some of the stocks into ETFs that were talked about on closing bell today. Now, Tom Lee was on of Fundstrat. He was on yesterday morning as well, so that's interesting that we got to see him 2 days in a row. And the markets today were slightly down, except for the SPY, which was up just 0.01%. We'll take a look at some of the Mag 7 stocks as well as the strongest sectors in this video. And we're going to use the Ichimoku indicator to help us identify the strongest groups to look at. Well, starting off with the summary here, the Dow down 0.02%. You can see the price gap down in the morning. It steadied out, and around 12 p.m. it started to regain, and it actually closed very close to prior day's closing price. The NASDAQ was just all over the place, but it did actually close down just 0.01%. So it was very flat. Same thing with the S&P 500. You see it gap down in the morning, got up a little bit, just all over the place, and up 0.03. Russell 2000, though, got hit, down 1.31%. You can see it price gap down. It steadied out, dropped some more. By the end of the day, it recovered a little bit, but it was down still 1.31%. Let's take a look at the heat map. So this is going to show us the individual stocks within the S&P 500, and you'll see here that that Amazon, for example, was up 2.86. Netflix was up 2.17. Eli Lilly up 3.63. A lot of the financial stocks did well today, like JP Morgan, Visa, Wells Fargo. Nvidia was up, Broadcom was up, Microsoft up slightly. But a lot of the software companies like IBM, you can see there Cisco, all a little bit in the red there. The utilities didn't do so well today, neither did real estate or industrials or consumer defensives. And if we look at the sectors here, okay, we can see what specific sectors were up the most today. And it was basically healthcare, financial, and communication services, but they really weren't up that much. Industrials were down 1.17%. Basic materials, consumer defensive, they were also down, as well as real estate and utilities. All right, let's get into the stocks now. We're not going to spend too much time on each one. We're going to basically review these, and I've already taken a quick look to see what the weekly and daily time frames look like technically using this indicator, the Ichimoku. So we're going to let's look at the dailies. What I've done here is I put a blue little flag next to the strongest. All right, if it's lacking a blue flag there, that means that there's something wrong technically with the stock, whether it's on the weekly or the daily time frame. So let's get started here. The SPY ETF, as you can see, very strong, still holding up, still in a strong uptrend. But like I said, it says here 0%, right, for the SPY, which is very close to the S&P 500 index. And but overall still in a nice strong uptrend. The same thing with the Qs, which were down 0.08 but still holding up above the moving averages. You can see actually today the 9 period, the green line there, crossed above the red line, so that's positive. Okay, that's a positive move. We want the faster moving average to always be above the red line there. Russell 2000, same thing happened here. Even though price dropped to 1.30% for the IWM ETF, which is the ETF for the Russell, it did hold up above this prior high year of 226.71. So there's a good chance that we might see a little bounce tomorrow back above. FEZ did something interesting today. It actually, I just gave it a blue flag today because it, you'll notice here below, the 9 period crossed above the slower 26 period. So that's very bullish. It was up 0.46% and up the most out of all the ETFs that we have here in the ETFs. Now this represents the Euro Stocks 50, okay? And if you take a look down below, you'll notice that the ADX is moving up and the positive DI is above the negative DI. If we look at the weekly chart, that's also looking very bullish this week. All right, so I wouldn't be surprised to see the Euro Stocks continue to move up. Dow Jones, on the other hand, although it is still holding up on the weekly chart, it's still stalling, right? It has not been able to break this prior level where it keeps finding resistance, the 451 level. It's at 449 right now. And if we look at the daily time frame, all right, it was down 0.07, but it's showing a little bit of strength there, I suppose. I guess we could give it the benefit of the doubt that it was going to probably break soon. The VIX which represents the market volatility index, was up a little bit, just 1.3%. So it's at a level of 14.68. This is still very conducive to a strong continuation in the uptrend in the markets. All right, there's no big fear yet in these markets. We'll see a spike like we did back in April, early April, when we saw the VIX pop, and that led, of course, to the drop in the markets. We don't see anything like that right now, so we're just going to play along with whatever's happening in the markets. Here's some of the stocks that they talked about, like TerraWolf Inc., which was actually up 59.52%. I mean, it was, the prior day it closed at a level of $5.46. It's at $8.71. This is still a company that is not profitable. You can see here the profit margins are negative. So is the operating cash flow. The capitalization is $2.1 billion, but they have partnered, I suppose, with Google. And so, this is what part of the reason why this stock popped today. IJJ, the mid caps. This is the mid cap 400 value ETF. They brought up mid caps and small caps, so I thought we'd take a look at the IJJ and the IJR. As you can see here on the daily chart, even though it was down 1.10%, it too, we have a crossover here, positive DI, the 9 period above the 26 period. All right, and the future cloud here is still bullish. Senko Span A is still above the Senko Span B. And it looks good on the weekly chart too. Just this week, it actually merged right back above the cloud. The cloud has turned slightly bullish here, but it still needs to break, in my opinion, above that 129.17 level. It's also going to find some resistance around 131.62, this prior high. Intel, you heard what happened, right? Intel. Interesting how government is now starting to get involved in I suppose, owning part of these companies. It's going to start off with Intel. Maybe there'll be other companies too. Some similarities to countries like Russia, for example, right? Not sure this is a good idea. Anyway, let's take a look. So it's entered the Ichimoku cloud here on the weekly chart. This is a negative profit margin of 38.6% for Intel. It's been holding up above this level that you see right here, the 1851, for quite a while. See that right there? How it keeps bouncing off of it? The question is now, is this new, relationship with Washington, D.C. going to lead to an increase for Intel? Possibly. On daily chart, you can see it popped through the Ichimoku cloud. The cloud became bullish here, up 7.29%. But it's still inside the cloud, and according to the rules of Ichimoku, never a good idea to be adding positions there. The 200-day is still declining, and so, yeah, we don't have too many details about the deal that they made yet. Like, for example, what percentage of the company is the government going to own of Intel, which is kind of insane anyway. Eli Lilly, let's take a look at this one. Here it is on the weekly chart. We've got a bullish, they call this a bullish harami. Now this is when you have two candles. You got the red large candle here, followed by a small bullish candle. Now that is a bullish situation. However, it's still under the Ichimoku cloud, and therefore it's in bearish territory. It's above the 200. So it's on the weekly chart, it's not a buy signal here, and on the daily chart, it's still under the cloud as well. We've got a declining 200-day as well. All right, so I'd stay out of the Eli Lilly stock. Target on the daily chart looks pretty bullish, but it's still under that declining 200-day moving average. On the weekly chart, it is still under the cloud. No on Target. IJR, the small caps. Now the small caps are not as strong quite yet, as at least not as strong as the IJJ. So the IJR, which represents the small cap stocks, is still under the cloud. All right, so I would hold off on IJR. IJJ is a better pick since it has broken through. Let's see, AMCR. Here it is on the weekly chart. A bearish engulfing pattern has emerged here. You can see these two candles right here. The larger red candle is engulfing the smaller bullish one. Therefore, this is a bearish situation. It did come down to these levels here, this prior low, and then kind of stepped up a little bit there this week. This is what it looks like on the daily chart. All right, so you can see that it's certainly in bearish territory. I'd stay out of this one too. COHR, Coherent Corporation, where it was looking very strong above the 200-day, above the Tengen-sen, above the Kijun-sen. Well, today it dropped 19.61%. Look at the big gap down. Now, what's interesting is, where did it stop? Where did it stall? Right at the cloud, right at the 200. Interesting. So, and we have a reversal candle, so there's a possibility here that this could bounce off this level. Would I be adding a new position here? No. But if I held a position here, I'd probably wait to see what happens in the coming days, Friday and next week, to see what happens if the cloud can hold it up, because it does have support here at the bottom of the cloud, the top of the cloud, the 200. All right. If you look at the weekly chart, look where it stalled on the weekly, around the top of the cloud. And you've got that 200-day moving average still there as well. But it was a bad day, down 19.6. That's a huge drop. All right, let's see what else. Let's take a look at some of these Mag 7 stocks, like Meta, for example, which was up 0.24% today. Here it is on the weekly chart, still looking pretty strong on the daily chart. There's that triangle where it broke through. It's holding up above that level there. Maybe we'll see a little bounce again, but it's not really super strong here, this up move. So interesting to see what happens in the next few days. Apple down 0.26%, a reversal candle. We may see it pull back tomorrow. Here's the weekly chart. It's coming close to the level of resistance at the top of the cloud. It's only about 2.3% away, so it might move up slightly and then drop. Just a hunch on Apple. Tesla, this one here, still, look at this, folks, on the weekly chart, still under that trend line. Notice how it found resistance. Well, the trend line was drawn by taking that high and that high right there, okay? And look where it is. It's still under that trend line. If we look at the daily chart, okay, even though that's a weekly level though, right? So by Friday, we have to see where this breaks. If it breaks above, that might be very bullish for Tesla, if it can get above that, and especially if it can break through this cloud. But I don't think it's going to happen. The cloud itself is about 10.9%. We'd have to see an 11% move up in Tesla for this to break out this week, basically. And I don't suspect that's going to happen. So yeah, it's a no-go for Tesla. Let's look at these strong sectors here real quick. These are the ones. So the ones below here are not as strong technically. I'm just looking at the ones that are the strongest from a technical perspective. So we're going to just look at these. Here's XHB. Here it is on the weekly, popping through the cloud. It's still above it on the daily chart. Still looking pretty bullish. The XHB ETF. GDXJ. It was down 0.4%. Here it is on the daily, still looking strong. Copper down 1.52, but still holding above the moving averages. GDX, same thing. XLC looks pretty good, right? It broke through this high 3 days ago. That was on Tuesday. Here we were on Wednesday. Here we are Thursday. It's still moving up. Communication services looks good. IBIT, this one here popped yesterday, moved up, and then it dropped. Now, where did it find support? Right at the Tenkan-sen, the 9-period moving average, and the 26, and the trend line. So I think it's going to probably bounce off that level. But we'll see if I'm correct or not. How about SMH? Semiconductor ETF, up 0.23%. Very strong uptrend here on the daily and on the weekly. ETH, Ethereum, very strong. Look at this on the weekly chart, guys. It's broken through this level. This is the first week where it broke these highs from 2024. Okay? So I like what I'm seeing here with Ethereum. Here it is on the daily chart. It pulled back a little bit down, 4.27%, but still a very strong uptrend. I wouldn't be surprised to see it pull back slightly more, maybe down to the Tenkan-sen before it bounces. GRNY, stuck inside this little box still. Apparently, it broke through temporarily, and then it came right back in. But GRNY, that's Tom Lee's Fund Strats ETF, the large cap. You'll notice that it did hold up above the 9-period moving average. So that's very strong. That's very bullish. If we look at the weekly chart, that still looks pretty good here with the cloud itself. XLP, Consumer Staples, on the weekly looks good still, even though it was down 0.9% today. Here's a daily chart, pulling back a little bit. All right, so we'll see what happens here, but it did create a higher high here from this prior high. That's bullish. XLK, Technologies, has been a nice strong uptrend, 45-degree angle or so, something like that. And it's holding up above the moving averages on the daily and on the weekly chart. Looks pretty good. So technology is not a bad place to be. XLK. And then finally, XLY, Consumer Discretionary. Here's the weekly chart. Very strong. It broke through these little... You'll notice here that it got stuck at this level for 3 weeks. 1, 2, and 3. It did not surpass. Guess what? It's happening this week. I wouldn't be surprised to see it come back up. Where will it find resistance next? It will find resistance around this level. The high of that candle right there is 240.28. Let's put that in there. Okay, and then here we go. We'll color light blue. That represents the weekly chart. What I like to do is change the colors based on the time frame. So if it's a weekly level, it will have a blue resistance level. If it's a daily chart, it would be red generally. How far are we from 240.28? We are approximately 4.4% away. Okay, so I wouldn't be surprised to see that reach that target before maybe stalling. It will either stall or will break through. The news will help to create that catalyst that leads to the XLY continuing its moving up. All right, now, if you guys are interested in the software that I have here, it's called TC2000. All right, and let me just show you guys something about this software. Right here on my homepage, if you go to Blue Cloud Trading, you can get a $25 coupon with the affiliate link. The affiliate link can be found here. Right here next to the join button is the 9 more links. If you click here, 9 more links, it will have a little description about my channel. You just scroll down a little bit. Here's the $25 coupon for TC2000 software. Click on that link right there. It will bring it up. You can enter your email here, download the software. It's available for Windows. You would need to use Parallels in order to run it on a Mac machine, but there's also a web version of this, okay? Now, if you want to find out about pricing, it has changed recently, so check out pricing and software plans and data. Let's see, monthly charge. Let's see, what is that? So, okay. So the basic, now that it's changed, it used to be like silver, gold, and platinum. Now it's basic, premium, and premium plus. They just changed the names and they changed the prices too. They're a little bit more expensive, but you could do the basic, for example, for free for 1 month, which is not a bad idea because now there's actually more things available under the least expensive option. For example, you'll get real-time U.S. stocks data feed, which is good. You can see the little thing there: stock and option charting, live streaming watch lists, customized layouts, real-time financial news, and practice. You can practice paper trading. So if you want to practice trading off the charts, you can do that with TC2000. If you want additional things like, for example, the ability to draw on the charts, so chart drawing tools, and look at this. You can track, you can create alerts, up to 100 alerts, easy scan, wizard, all this stuff. Consider that under the next level, which is the premium, $50 a month. And then in the premium plus now, it's $99 a month. You can see here real-time market pulse gauges. You can get, you can track up to 1,000 alerts, intraday performance columns, live auto refresh filters and sorts. And yeah, and if you like switch it from to annual, where you pay like once a year instead of every month, you can see how the price drops. Okay, and if you go biannual, like you pay once every 2 years, it drops it even more. It drops it to $18.74, $37.49, and $74.99. All right, so with that said, let's go back here for just one more moment. If you guys also want to check out some of my other links, you can do that here. And just remember also that you can become a member. There's going to be some information. I'm going to do a quick little upload of a pre-recorded video on how you can become a member. If you want to stick around to find out a little bit more about the members only video that I post each weekend. All right, let's talk about that for a moment. So, you're coming to this channel for the first time, you may not have subscribed yet, which is kind of crazy. Can't believe that you haven't subscribed. This is free. Hit the subscribe button. I'll be popping up in your subscriptions in the future. If you hit the notification bell as well, you will be notified. So, where's the notification bell? Well, once you hit the subscribe button, okay, it will pop up the notification bell, and then you can select that. Another interesting that you'll notice is that you get this little plus button right next to the subscribe. That happens after you've subscribed. Why? Because they're giving you an option now to join, all right? And if you click on subscribe at plus, once again, another thing pops up, and this is the membership. This is where you can support the channel, okay? You can either become a Blue Cloud supporter, a Blue Cloud trader, where you get access to exclusive member-only videos here under Blue Cloud Trader. Under Blue Cloud Legend level membership, you get those member videos. You can get access to day trading videos as well as the daily trade updates that I post. Now it says here under the community tab, it's not actually under the community tab. It will pop up in this next thing here. Boom. Once you've become a member, you'll see a new tab pop up called membership. You click on that, and that's where you'll find those daily posts on the trades that I've placed. What do I cover in this members only video? Like this one here, for example, that I posted just 21 hours ago on August 8th. I go over the, whoops, hold on one second, let me go back. You will see exclusive member only video. Okay, weekend update on the trades I placed throughout the week, plus new stock ideas for the upcoming week that are setting up. Okay. And all you need to do is just scroll down. You can see you'll have access to older ones as well. All right. So you get a more insight about my trading strategies and, you know, the stocks that I'm actually holding, plus those 20 new stock ideas. All right. Something to consider.